All right. Everything looking good, and we are live. What's going on, Yoda? Just let me know when I'm coming through. Everything is loud and clear. But what's up with you? Hope you're having a good evening, night, day, wherever you're at right now as well. All right, let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 5/15/2022. If you're new to the channel, make sure to remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. What's up, honkiness? Good to see you. Loud and clear. Appreciate that. Trader Billy J. Good to see you, Bill. What's up with you, man? Hope everything is good. Yoda, loud and clear. Okay, great. Sounds like we are coming through loud and clear. Calma Betty, good to see you. All right, excellent. Hopefully everybody's doing good tonight. Enjoying this little bit of reversion to the mean price action. Kind of seeing Bitcoin basically drop down over the weekend and then just basically pump back up to where it closed on Friday. But obviously there were some key levels we have been watching for, not only our daily but weekly closes for cryptos and stock market as well. Saw a little bit of strength coming into Friday's close, well, really all day Friday, which was good overall for the markets as they had a little bit of positivity. We saw a couple of the really beaten down stocks and cryptos have some nice bounces back to the upside, but obviously we are still very well below recent prices, let alone peak prices. So that being said, let's jump right in, take a look at TNX. So the daily chart on TNX, obviously we rolled back over and are hanging out right around that 2.934 level. Nothing crazy going on here. Still strong. Obviously we saw some bearish divergence playing out between our most recent peaks on the daily, and we're seeing a little bit of a pullback right now. So we would expect this level to hold maybe slightly lower, around like 2.75. Nothing too much going on here. This doesn't look bad to me at all. And when we zoom out to the weekly, we do see we had a bearish engulfing candle, or well, just about, not quite, because we technically gapped up slightly and then we came down, but we didn't quite fully engulf the candle before. So on the weekly, we're seeing our first red histogram and sign of weakness. We were obviously at extremely high levels. We see our stochastics up here at like 96.8, 97. So it would not be unrealistic to see a pullback. Now, do I think we're going to come all the way back right now to retest the 200 exponential and simple on the weekly? No, I don't think we're going to go straight back to 1.74, but it's not unrealistic to think eventually, and the longer it takes to get there, that we see these curve back up to around 2%, and we actually get, a move back to about 2%. It would not be surprising at all. The most important thing at this point in time, though, is just maintaining above that previous resistance / support level around like 1.75, and then just staying above the 200 exponential and simple. I mean, this thing has gone into a weekly bull market now, and obviously still have a few weeks left on this month. But again, we want to watch and just make sure that the monthly closes. Obviously, we don't want a super bearish looking candle. Right now, this candle looks a little bit indecision, arguably toppy, but we still have a couple weeks left in the month. So still too early to tell. But again, the most important thing to do is stay above the 200 exponential and simple moving average on the monthly, which is around the same area as we were just talking about. It's that 2.7 level. Now, again, we could easily wick down below it and come down to like 2.0 or something like that. But we don't want to see, a complete like blowout of this chart on a retrace. We want to see like those key levels holding. But see, obviously here on the daily, the 200 exponential is all the way down at the 2 level. So again, when we look at that weekly, we're way above it, but it's not that unrealistic to think that we could eventually get a retest down to like that 2. So while it's starting to look a little bit toppy right now, I'm not rushing into bonds. I'm not, scared of this, but it does look a little toppy. So here's our 210 cross chart. So again, we pulled this up last time. We've been paying attention to it quite a bit lately, and then when everybody started talking about the 210, kind of just cut it down a little bit, because if everybody's talking about it, it's old news, honestly. By the time you start hearing about it on mainstream media, the talking heads, the influencers, it's too late. The move has played out. So expect a counter trend move. Not to be a contrarian, But what we're seeing now is the yield curve inverted for basically a day. It uninverted and then kept going to the upside. And the 2 was actually gaining on the 10 this whole way up. And now we're seeing actually the 2 and 10 diverging slightly. So what we're going to pay attention to here is not that the 2 and 10 crossed, but that 1, we're at a resistance level, and 2, we're paying attention to see when the 8 and the 21 on the weekly 210 chart, which we're looking at the 2-year, and we're looking at the 8 and 21 week moving averages of the 2-year, and then we're going to look for the cross of those, because when this flips red, we know the recession is not nearly as far down the line as when the yield curve initially inverts. So we'll see here this past one back in 2020 was right around 56 days from the cross down to when the actual recession started. So about 2 months. Here we see the cross down, and this was our 2008 or 2007 technically. And here we see 168 days, so still close to a half of a year, or roughly a half of a year. And then here again we see like the same type of thing. So it gives us a little more accurate of a target. See, this is 315 days from when the yield inverted and then the 821 crossed down to when the actual recession was technically had taken place. So we can see in these cases that it's a good indicator of what's to come, but not necessarily for timing. So we need to pay attention to that. Obviously, we've already seen 1 quarter of declining GDP growth, so we're already halfway to a recession. And, you know, if you had to just guess right now, you would just assume we're going to get a second one in a row. So, but we'll see. TLT, obviously down at support. I mean, we came all the way down to the lowest support level that we basically had charted on this thing. We're getting a hard buy coming out of, you know, that support level, coming out of the bearish control zone. We have bullish divergence between these 2 peaks right here. Not unrealistic to think we get some sort of an attempt back to the upside. Now we know obviously our target to the upside is like 131. You know, are we going to see a big, like, you know, 15% move in the 20-year bond anytime soon? I mean, your guess is as good as mine, but if it's going to happen, it's going to happen probably from around this level. So, you know, and then obviously, if we look at the weekly chart real quick, just because we did obviously just have our weekly close, we can see we had a nice bounce off the bottom, but at this point in time, all we did was come back up and retest resistance and then get rejected and close below it. So while these are really beaten down, and I know there's a strong argument for they're super beaten down, this is great value, you know, rotation back into the bond market after all this money moved out, after it was all destroyed, you know, be greedy when everybody else is fearful. I get it, but we broke down from a key support level, and then we're retesting it, and we're closing at or below it still. And this is, you know, essentially been support the whole entire way up. So we've never seen a break or even a close down below it this aggressive before. So, I mean, for me, you know, I'd rather just play it safe and wait until we're back inside of like support area, up a couple % on this, and then we can start looking for like higher moves to the upside. But honestly, we're looking at this more as an indicator of what's to come than an actual, like, you know, tradable asset right now. So US oil is next. So US oil, we push back up here. We obviously like gapped up and we're slightly above that recent low. That doesn't really mean that much to me. Obviously, the key level we're watching for is 114. So we had this descending triangle. It was a bearish pattern. It looked pretty toppy. We broke out of the pattern. We came back down. We retested it once. We retested it twice. A third time, it held. And now we moved to the upside. So we took out that previous high. This is the one we're really looking for. We really need to take out that C point, the white resistance at about 114.50. Or arguably, if we broke down below 93.80, those would be the key levels to watch. But obviously, you guys know I am bullish on oil long term. This was a cooling off period. What should have been a 66%, you know, bearish break, 34% bullish break, broke out bullishly. It's holding that area. So there's no reason for me to think that we're not going to see bullish continuation. If we close above 115, I think we head straight back up to retest the highs and then probably to all-time highs after that. So oil still looking pretty strong. But again, I'm not going to get super bullish on oil until it closes back above 115. Because it very easily come back up here, retest this level, roll over, and then put in a lower low. And it doesn't change anything on the macro chart right here. We need to take out this high right here, or arguably, if it's going to break to the downside, you know, below that previous low at like 94. So the Dow Jones, so all right, so we looked at all these levels in advance, you know, so we have a pretty good idea of what we were expecting. So we got the perfect bounce off of the 236 macro. You know, and again, I've said it a bunch of times. The fib should be on every one of your charts from the Rona low to our, you know, your highest high or local high or cycle high, however you want to like label it. But that should be on every chart right now because that's the most relevant levels, and markets are trading extremely technically. So that's like a freebie from the markets to watch those levels. Now, when we zoom out and we start to look at this on the daily, yeah, we're in the bearish control zone still. We have one green histogram. We're closing at support down here, 236, with a rejection and then push back up to resistance. So we bounced support. We had a rejection of lower prices, and now we're closing at resistance. I might have said that backwards, but you know what I meant. We are well below the 200 exponential and simple, and they are both angled to the downside. So on the daily chart, this is very bearish. We also have a high. Then we have a, arguably, depending on how you want to look at this, high, low, lower high, lower low, lower high, lower low. So we're clearly in a downtrend, clearly accelerating to the downside. So, you know, we had this basically descending kind of channel drawn in. It's not nearly as clean now as it was before. So maybe it's time to just kind of adjust it. Maybe look for some other way to do it. Nothing like super clean on a channel right now, obviously, after everything has kind of developed a little bit. So you could look at something maybe like this, or maybe got to look at it on a different time frame. There's nothing like really clean here, because, like, you know, if we connect these 2 points, we obviously poked out the top. If we just skip this one, we kind of have a descending broadening wedge, you know, but then we got all the wicks outside and one candle out here. So again, it's not a very beautiful chart pattern. Now maybe it's going to turn out something more like this, and we're going to have our support here at the close, and then we still have a ways to go, and that's going to take us down into, you know, our lower targets and some of these other key levels that we've been watching. So we don't know, obviously, right now what's going to happen, how it's going to play out, but we're paying attention to that. Now, when we zoom out here and we look at the big picture, though, let's switch to the weekly now. When we look at the big picture, and I'm going to turn down the intensity on this a little bit so it's a little more legible. Okay, so we have a bunch of key levels to watch. So when we look way back, we know we have a gigantic channel. You know what? We can look at the monthly, and then we'll just work our way forward. So here's our monthly chart going back to, you know, basically the 1900s, 1897. So we have this channel we act inside of. We basically get a blow off top outside the channel, you know, come all the way back down below the channel. Basically that reversion of the mean. Right in the middle is the 200 exponential and simple moving averages. And we get a, you know, multiple standard deviation push to the upside, multiple standard deviation overcorrection to the downside. We revert back to the mean, and then eventually start moving back to upside. Now, once we move back to upside, we started forming this channel here, basically from, you know, this is the big crash in the 30s, and then that's our like early 40s. And then we have a peak right here in 37. And then we see over time, we don't actually have our new resistance point until all the way forward in 99. So this touch point right here is from 1929. The next touch point we have on that top resistance for the channel is 1999. So we're talking about 70 years between touches. So, you know, and that's only 2 touches. So not always the most accurate. But when we start to look out further into the future at what happens, we see we operate inside the bottom of the channel between the blue support line and the yellow resistance line. We finally break above it back here in 1995. And then 95 we put in shortly afterwards that peak. And then from that point in time, you know, we basically bounce the heart line right here, and then we creep all the way back up, and we actually put in our third touch of that top resistance line going back to the 1920s in 2018. So we touch in 2018, and then we come all the way up here. We actually break out of it, and then we break back down below it. And then that is the purple line that is acting as resistance right now. So all we did was break out of the top of a 100-year-old pattern, and then now we're retesting it as resistance. So we already lost it as support. We have 2 weeks left to reclaim it, you know, and close above it, and then possibly continue to the upside. Otherwise, it's going to look like we broke down from here. And the most likely next move for us is to start retesting some of these key supports. So that's where the big support from, you know, the 2018 top comes in around 30K Dow. After that, you know, we have some lower levels on our Fibonacci's at like 25, etc. So we have like macro Fibonacci's, we have short-term Fibonacci's. We have to watch those. We expect stair steps on the way down, you know, as usual. But when we just turn off all the noise, all the drawing tools, and we look at what's going on here, the most important thing is on the monthly chart, we left the bullish control zone. We got the hard sell signal. That typically leads to a pretty decent sell-off. But most importantly, even if it doesn't lead to a deep sell-off, in order for there to be a deep sell-off, that always will trigger. That signal will always show up on our chart. It will always warn us there is now an extremely heightened potential for a big sell-off. And we know it's extremely heightened because without that hard sell signal, we can't have a big sell-off. It's impossible. It's never happened before. So that being said, that's a key indicator for us to look out for. Sometimes it'll be a false alarm. Other times it will save us from 10, 20, 30, 50, 80% drawdowns. So it's very important that we respect that. Now we have a bunch of red histograms on the monthly, which means that we've been selling off consistently for month after month after month. The bears are winning. If the histogram is red, it means the bears are winning. When the histogram's green, it means the bulls are winning. If it's above the zero line, it means the bulls are in control. If it's below the zero line, it means the bears are in control. So right now, the bulls were in control and the bears are strengthening. They're winning the fight. And now this monthly is now below our slope line, and the slope line has flipped over red. So now it means the bears are all but in control. We're still in bull territory, but the bears have the ball and they're in very, very strong control. So that being said, we try to bounce some key levels on the chart itself, and we see those have failed as well. We have the 8 and 21, again, failed, and we're breaking down from it now. So we still have a couple weeks left to see how this monthly plays out, but we don't want to see a close below like 32, 33,000 because that is the 21 moving average. And we know that in order for the 821 to cross down, we have to close below the 21. So we can get signals like this, you know, okay, it's a big sell-off. Sure. From the top to the bottom, it's a big sell-off. But on a monthly time frame, did we need to exit this? Not really. I mean, 16% sell-off. It's big, but it's not like the end of the trend. I mean, if you look at the, you know, the following 3 years after that, we went parabolic. Now, here's the opposite. You know, again, same thing, false alarm. We don't want to get out. But here, the 8 and 21 cross the downside, and we immediately see, you know, basically that capitulation candle coming down. So again, the likelihood, we can see here, this one didn't capitulate, that one didn't capitulate, that one didn't capitulate. So yeah, maybe we only go down 20%, maybe we only go down 30%, but we're trying to avoid this. Right now, we're playing defense. We're up. We've got way more goals. You know, we're crushing it right now. We've got all the points on the board. All we have to do is play defense right now. And then when the market turns back around, you know, we're crushing it. We have a huge lead. And that's the most important thing right now is preserving capital in the downtrend. So that being said, we can see the overall look. We can see what's taking place here. We don't want to see closes below the 21. We obviously do not want to see the 821 cross the downside. And we 100% do not want to see the monthly reversion to the mean play, which we have not gotten since 2008. And that was the retest of the 200 exponential and simple, which is roughly like a $20,000 Dow. So a substantial way down. But, you know, that would be a potential macro target if the bear market gets dirty enough. Next, we have SPY. So, again, we got a nice bounce on the old spider. At key levels, 236, at the heart line right now. Again, the heart line is acting as resistance. We broke down from it. We came back up, and we see the green dotted heart line, and it's acting as resistance. So, we don't know right now. Did we reclaim this level? No. Did we lose this level? A little bit, but we don't know now what's going to happen. Are we going to reclaim this level and then get our reversion to the mean play and then start retesting the 200 exponential and simple again? And then if we can reclaim those levels, maybe turn back into a bull run? It's possible. Or are we going to get rejected here? This is our break, our retest, and then we're going to see continuation to the downside. And then people that buy the dip right here are going to get trapped as other people are selling into resistance. Probably. I mean, we're in a downtrend, so that's 60-40 probability. We'll say 60% we go lower, 40% we don't. So below 200 exponential, below 200 simple with the bearish slope. We know what levels we're watching. We obviously got to bounce off of a key support level. And we're basically just looking for like slinky theory, just walking down the steps. And by steps, I mean, you know, key support levels like our Fibonacci's. So next we have IXIC, Nasdaq. Again, we hit our perfect buying level. We obviously had pulled this out because of the 382 target. Nasdaq is much weaker. We were talking about the 236 on the Dow and the spider. We're talking about the 382 on the Nasdaq. So the Nasdaq went parabolic, but it's also had a much deeper retrace. We also tagged the 200 exponential on the weekly, which is a key support level, obviously. So that was a potential short-term scalp buying opportunity, but in no way, shape, or form is that even necessarily a tradable bottom. I mean, we still have to see yet, at least in the indexes. And some of the individual stocks, obviously it was. We still see all red histograms. We see a hard sell signal below the 40 at the bottom of the range. So don't give a ton of respect to that, to tell you the truth. But when it's all said and done, You know, that's a decent rejection candle on a weekly, but still not looking at that and saying, okay, time to get all back in here. Everything's good now. And then when we switch to our monthly chart on the Nasdaq, we see we are substantially below the 821. Every other time on the monthly, when we had a situation like this, we basically get like one close below it and then immediately rally back up. One close below it, immediately rally back up. Here we get a close below, a rejection of lower prices, and then a rally back up. One close below, we rally back up. So we need to really pay attention to what's going on here. If we get this second monthly close below, it doesn't mean we have to go lower, but we know we're continually closing lower lows, and there's not a lot of support below us on a monthly time frame, especially if we do get that big close. You know, basically what we're doing here, we're watching the 821 cross. It never happened this whole way up since 2009. So that's great. It's been bullish since 2009. But now we're very, very close. We're the closest we've been to the 821 cross. And when that happened back in 2008, that was right before the capitulation move. When the 821 cross happened, not even from peak to trough, just from the cross to the bottom, you know, we're looking at a 50% move still, even more obviously from the peak. So that's what we're being careful for. That's why we're being super defensive right now. Because we know if we lose half of our account, we have to go down 50% is the equivalent of up 100%. So under no circumstances would we ever tolerate risk like that. So next we have the Russell. Obviously the Russell looks like trash. Again, hitting the 382, our key support level that we've been watching out for. A little bit of a dead cat bounce, much less awe-inspiring. We do see our first like daily green histogram. All right, so the real question is, what is this? Is this exhaustion? Is this just an exhaustion bounce? I mean, we didn't see true capitulation. We saw a little bit of capitulation once we broke out of the bull flag. But I think, honestly, we're just doing what we've been discussing, which is we had a leg down. That's our A. We have a B correction back to the upside, and then we get a C correction back down. So, in my opinion, we still have ways to go. It looks like on the Russell back to the 0.5. Maybe on the Dow, maybe on the S&P. You know, we bottom at the 382. Maybe the Russell and the Nasdaq go to the 0.5. But regardless, we're not seeing any bottoming signals right now. We're not seeing any real divergence on any of these charts here. No bottoming signals, in my opinion. So XLE, energy, looking strong. Obviously, as long as oil is strong, energy is strong. We are potentially looking for a slightly higher high right here and another drive of bearish divergence, which, you know, we've had quite a few already, obviously. But, you know, we have one drive here, 2, 3, 4, and then arguably, this is going to be our fifth drive of bearish divergence if we put in a higher high here and a lower high on the indicator oscillator. Or maybe we put in a lower high here and a higher high on the indicator oscillator. Either one would be acceptable. Less likely to happen, obviously, but we're just looking for bearish divergence, and then we're looking to buy the dip wherever this goes back down to, because obviously we're still macro very bullish on energy. So XTN transportation, so we came all the way back down to the bottom of the channel. We got a slight bounce back up to the heart line. You know, again, same thing. You could argue that we shouldn't be using a channel. Maybe we should just have converted completely over to our, you know, just descending support line right there. I wouldn't argue against it. I mean, that looks a little more realistic to me, honestly. But again, you know, sometimes these patterns adapt. It's important for us to keep an eye on it and adjust accordingly. But we did lose the 236. We are below the 200 exponential and simple. Seeing some extreme weakness in transportation, obviously. And we see that our dump so far has actually been, once again, a perfect touch of the 200 exponential moving average. So like to the wick. So again, that's why it's so important to use the 200 exponential and the 200 simple, because sometimes, and depending on the market, it might respect one and completely disrespect the other. It might respect them both, but it very, very rarely disrespects them both. You almost always get a very clean move off of one of them. And you don't know which one it's going to be, to tell you the truth. Because typically, you know, stock market is going to trade more off of the simple moving averages, and crypto is going to trade more off of the exponential moving averages. But that's just not always the case. And they obviously work beautifully in tandem. So here we see transportation looking very weak, but at key support levels. So again, we don't want to get too bearish on these things after big moves down. We get bearish before the moves, we get bullish after the move down, or at least pay attention. You know, are we getting dead cat bounces, or are we potentially threatening the downward trend to potentially flip it back to a bullish trend. So next we have XLF, so financial sector, obviously just getting decimated. I'm thinking maybe this is a little, oh yeah, that's a little cleaner right there. Off of this close, that close, and now this close here. Again, we're at the bottom of the range, and you could argue once again that, this was just the opposite, but not necessarily drawn in the most optimized way. So if we take out that channel, we now have a descending broadening wedge, and we're at the bottom of the wedge right now. So do we come all the way back up here and tag the top? Maybe. Do we get resisted at the 35 level? Do we get resisted at 200 exponential and simple? We have to wait and see. This thing's getting pretty beat down, but again, we're not seeing any form of bullish divergence or anything telling us these things are bottoming, and we just broke down from a 200 exponential and simple. So they now have a negative slope. We're clearly in a bear market. We just had a retest that failed and put in a lower high. We're clearly in a downtrend, a series of highs, lows, lower high, lower low, lower high, lower low. So eventually we expect a lower high somewhere maybe in 36, 37 range. But I would expect that to be sold into and aggressively. So XLV is next. So healthcare came back down to support. Okay, so this is one that we're really watching now because we're at a key horizontal support level. Ascending and descending resistance and support are great and everything, but they're very subjective. We just like kind of altered some of our charts over the last couple weeks, and then just right now in real time, how we were drawing in those lines. That's much less likely to happen with a horizontal. So in my opinion, a horizontal is much more respectable level because everyone's going to see the resistance and the support roughly at the same place. And then arguably they could be using a Fibonacci and have a horizontal support. They could be using a moving average, have that same support. There's just so many more ways that people can be looking at the same thing. And because so much of trading, scalping, swing trading, even investment, but purchasing or selling at support or resistance, so much of it has to do with psychology. It's important that we respect those horizontals. In my opinion, moving averages and horizontals should be respected like over just about anything else because they're just so much more clear to the market. So right now we're respecting that key support right here, and everyone's seeing that same thing, that 125 roughly level. If we lose that level, it's going to look really bad. We just flipped the 200 exponential and simple bearish, and we just got basically a 2-day bounce off that level. So what I would expect to happen is a slight pushback to the upside, a potential reclaim of the 200 exponential and simple. And then healthcare looks like it wants to roll over. Bears are in control. There's 2 green histograms at support. To tell you the truth, I don't think there's anything really tradable right here. But, it looks like this really wants to have at least like a 3% bounce up back to the upside. Next, we have Xlu Utilities. Very, very similar. We're down here retesting support. This isn't a super, super clean chart because you could argue that the resistance or support should actually be drawn like basically at the level we're at now based on some more of like this price action. It's very subjective right here. Basically, as long as we're between these 2 yellow lines, we're trading in between resistance and support, and the 200 exponential and simple are creeping up here. So as far as utilities, look okay for now, but we really have to be careful because if we break down from this level, we lose the 200 exponential and simple, we're probably going to retest the bottom of the range, which is the bottom of this long-term channel. And we don't want to come all the way back down to the bottom of the channel. While it's still bullish and we're consistently putting in higher highs and higher lows, and this is a great safety play if we do go into recession, as many, including myself, speculate that we will. But at this point in time, we're close enough. I think this is sort of a no trade zone. We're at support and resistance. If we break down slightly lower, I think we want to buy the bottom of the channel again. Obviously, that's been playing out very nicely over time. We see this chart goes back, literally decades. So, we've operated literally inside of this channel since 2008. So we've had this exact, beautiful, perfect channel to trade inside of. The majority of the time we're in the top of the channel here. We get some spikes below it. The spikes below it should have been buying opportunities. And then here we're in the bottom of the channel. And then we get some spikes above it. The spikes above it should have been selling opportunities. Here we are. We just topped out at the heart line. And we're potentially, we're in the middle of the heart line and the bottom of the channel. So if we come down to the bottom of the channel, it's a buying opportunity. If we come back up to the heart line, it'd be arguably a selling opportunity. And then if we start to flip the heart line, what is resistance, into support, we could expect the remainder of the move back up to the top of the channel. If we start to break down here and lose support off the bottom of the channel, then we can start looking for like a serious breakdown and potential test of like much lower prices. But for now, everything looks good. XLP, so consumer staples, still much stronger than most of the other sectors in the economy or in the stock market, at least for now. The 821 cross did occur on the daily. We bounced a key level. We're holding slightly above the 200 exponential and simple. I don't have a strong view on this for right now. Technically, we need to be like short-term bearish because the 821 cross has happened to the downside, but we are still above the 200 exponential and simple. Each time we've touched it, we've put in a higher high and then a higher low. So this thing is still in a pretty strong overall uptrend, and it looks to me more like a bullish reset that's taking place right here. So I think probably consumer staples have more upside potential or less downside potential than at least most things right now. Now, when we do look at consumer staples on the weekly, we see that we have developed now another drive of bearish divergence. So we have a peak right here, and then we have a lower peak right here. And then the same thing going on with our stochastics. We have a peak right here, and now we're starting to roll over potentially a lower peak right here, and that lower peak has taken us to higher price action. So we do have our first bearish divergence developing on both indicator oscillators on the weekly. So that definitely tells us that maybe consumer staples is a little tired and it's time for a pullback. Even if it doesn't end the trend, at least a retest to make sure that we're still putting in higher lows. So key level to watch, in my opinion, we really need to stay above like that 71 level. And then after that, it's like 68. But as long as we're above that previous low at 71, the trend is still intact. And I still think we see continuation to the upside. We do have a slightly higher target right here. But as far as I'm concerned, consumer staples has all but fulfilled our expectations. XLRE, so real estate, obviously we got that key breakdown from our neckline of the head and shoulders potential topping pattern. Obviously we have our first short position has already played out. We still have quite a bit to go for the remainder of the position, but we did get a breakdown. Now we're getting the retest. Two things are going to happen right here, one of two. We either reclaim this level and then we can reassess, or we basically retest it as resistance and then we continue lower. So that's what we're looking at. We're back at that level. We're at resistance. We're at support. Which one's going to win? We really have to see what the market has in store for us. We don't want to make presumptions, but again, we're below 200 exponential and simple, so probability is to the downside. And typically when you lose a key support level, you will retest it, it will act as resistance, and then you will continue to the downside. So that's going to give us our 382 target of 39.30 for XLRE. Real estate. VWO, Vanguard FTSE Emerging Market ETF, down to the 0.5 now. So we have this micro Fibonacci drawn from March of 2020 up to our micro top February 2021. And now at this point in time, we've retraced 50% of that move from the downside to the upside. So that was our target to the downside. Target was hit. It was slightly overshot. The real question is, what happens now? Well, probably slinky effect. We've been slowly just going down the stairs, putting in lower highs and lower lows, and then we fell off. We got a decent bounce back up, retested our breakdown as resistance, and then we went lower. So we're still just putting in lower highs and lower lows. So the next question is, do we get a retest now of the 382, and then that acts as resistance? We kind of already did, but before hitting the 0.5. So maybe we retest it again, but then after that, we have to just continue to expect lower lows. When something is putting in lower highs and lower lows, we just continue to expect that to take place. It's not unrealistic to think that we come back down all the way to our green support, which was our weekly close support line, and basically get a buying opportunity at like 36.22. So that is what we're looking for. And again, that was on the daily chart, but I was referencing weekly support. So DAX is next. So Germany doing okay for now, reclaimed some key levels, did put in a higher low from the previous low sell-off right here, which is good. Did not quite get down to our entry price, unfortunately. So this is not an active trade. But as of now, it is trying to push back to the upside. We see a little bit of a resistance, maybe off of like these previous peaks right here. So I think if we break above that, it's going to look pretty likely we get that 200 exponential and simple retest that we have been looking out for. The CN50 China. So trying once again to get that 821 cross back to the upside. If we do get that cross, we probably come back up here to about 14,650. Still a little early to tell, but now what we are paying attention to is here we put in a low and here we put in a low, and then we put in a higher low here than the previous one and a higher low here. But here we put in from that low a lower low, and then here we put in a higher low. So we are seeing some short-term daily bullish divergence taking place, giving us the potential that China will see a little move to the upside. From there, we'll have to see what happens. But arguably now, we're finally seeing some divergence. We're finally seeing some kind of indication that this may have, at least temporarily, have a decent tradable bottom. Now, how tradable is it? Well, we're in a downtrend. It's a 2-to-1 risk-reward ratio with a target of the retest of a 200 exponential and simple before further downside, 9.5% upside on that, versus a stop loss of a new low close compared to our most recent two closes of 4.5% stop loss with 12,770. So is it tradable? Technically, yes, because it's a 2-to-1 risk-reward ratio. But because we have to favor the trade to the downside, we know there's probably like a 60% probability of either underperforming or just further lows from here, with only a 40% probability of success or reclaiming those levels. So we have to be real careful taking 2-to-1 risk-reward trade setups. I'm really not interested in them, honestly. If you're trading against the trend, I want 3-to-1 risk-reward ratio. If we're trading with the trend, I want 2-to-1 risk-reward ratio. And if we're trading on a daily chart that's in a bull run or a daily chart that's in a bear run, if I'm trading on a 4-hour time frame, I respect the 4-hour, above or below the 200 exponential in the slope, but I'm still looking at the predominant overall trend, which is our daily or like weekly chart, depending on what asset we're looking at. So even if this chart right now and this is not going to be the case, but on the daily, this is obviously very bearish. But let's say on the 4-hour, we were to break back above the 200 exponential and simple, and they were to flip back over blue right here. Even though technically on the 4-hour, it's bullish, we're still respecting the fact that we're in a downtrend. And so we're treating it that we want higher reward for the risk that we take, which is why we want the 3-to-1 versus the 2-to-1. Doesn't mean the trade won't play out. It just means over time, if we're a little more nitpicky about our trades and like whether we're trading with or against the trend, and the risk reward that we take according to if we're trading with or against the trend, we're going to do much better on the long run. Maybe we won't be quite as active trading a limited number of assets, but we all know there are like unlimited assets that we can trade. So that's really not an issue. There's always a better trade somewhere else if you don't like the setup that you see. So next we have the UK 100. Obviously, UK 100 broke down from that key support level in yellow, broke down below the 200 exponential and simple, reclaimed the 200 exponential and simple at 8 and 21, but failed to do so with that yellow support. So we saw that previously happen, and it still recovered to a double top. So we don't want to see it happen again. We don't want to see this continue lower. We don't want to see it take out that previous low. We definitely do not want to come all the way back to 382. I think more likely than not, after coming all the way down to the 382 and then failing a breakout, if we revisit the 382 again, we're probably going to the 0.5. And the UK is going to look real bad. Real bad. So next we have DXY. So again, still one of, if not the strongest chart that we're looking at here. I mean, this thing is just going straight up parabolic to the upside. So, while we don't want to get greedy on this, we know that we're also not trying to pick the top. I mean, this thing is going parabolic. Accelerating to the upside. The weekly close was extremely bullish. 200 exponential and simple, both angled to the upside. We've looked at this. We were well above the monthly. 200 exponential and simple, both angled to the upside. Very, very powerful trend taking place right now. And it will no doubt crush, completely destroy many people and their portfolios. Don't want to stand in front of a freight train. So Tesla broke down from key levels, tried to reclaim those levels. We did close at that, or open, I should say, at that same low once again. So it's holding support for now, but it's also getting rejected at resistance. So this is a super indecision candle at that 769, 770 level. That's a level we've been watching forever. No surprise. That was our previous high from the C of the triangle that we broke out of. The other key level was the A, which was obviously where we broke down from when we lost the 200 exponential and simple. At this point in time, we didn't technically put in a new low, but we were putting in consistently lower highs. So you could argue, no, we're not in a downtrend anymore because we double bottomed. Well, maybe we did, but it hasn't happened yet. There's no confirmation or anything. Tesla looks like it's going much lower. Maybe in the short term, though, it gets a bounce back to the upside. We retested back to the upside, the 200 exponential and simple a couple times, and still just put in a lower high. So it's not looking good. I think we're very close to, basically this rolling over and confirming into a bear market for the first time, because the 200 simple never flipped over on this. So this is holding up better than most assets, but starting to look like the beginning of what we saw on most assets. Next, Nvidia, and this is kind of our proxy for semiconductor space. So again, we're seeing a high, a low, lower high, lower low, consistently making, lower highs and lower lows. We did get that close back above support at the 618 that we were watching, and we talked about this potential trade setup, 25% upside target with a target of 221, entry where we're at right now, roughly 176, with a stop loss at 161.49, 8.5% downside, 25% upside, 3-to-1 risk reward ratio. So that is a tradable setup right there. And essentially what we're looking for is a retest to the 382 or the 200 exponential, possibly even slightly higher than the 200 simple. But again, we're in a downtrend. We're below the 200 exponential and simple moving average. There's slope to the downside. So we would expect this trade to underperform. So even though Nvidia is a strong asset and retail tends to pile in, we got to be real careful. Now, what we see here on the indicator oscillators is we see a micro low right here. We see a micro low right here. We don't know if that's going to be our swing low yet, but we do see our first green histogram. So we technically have, at this point in time, the beginning of some bullish divergence developing. And we see the same thing happening over here. The stochastic hasn't actually rolled back to the upside, but it's basically flattened back out. We got the cross down. It looks like we're about to get the cross right back up. And again, we have a higher low on the indicator oscillators, but lower low on price. So we see that same bullish setup getting ready to potentially play out on Nvidia. And again, a decent move back up here, over 25% target to the upside. So, we'll see that. That's probably going to be one of, if not the trade of the week for just some quick gains. So AAPL, the old apricot. No, that's not it. It's not even a word. So Apple threatening some key levels. It did take out the short-term low that we had right here. So again, we have a high and then low and then lower high and then lower low. So Apple not looking particularly great, still looking better than most. Retesting that key 140 level, coming close to hitting our target to downside. Now these blue boxes, obviously, I usually put between two key levels that we're watching so that we can take entries along the way so we don't miss them if they don't get down to the bottom of the blocks and we don't, buy in and then get stopped right out because they go into the deeper areas of the box and we bought right at, the initial entry. So that's why we have the boxes. So we did hit our target to downside. We didn't hit the 236. I do think we eventually hit the 236, but there's quite a bit of support because that's the top of our A, that's the top of our B. That was our horizontal resistance that then acted as support. And now here we're testing it as support again. The market, as would I expect this area to hold, at least temporarily. So at this point in time, we'll see what happens. Do we chop down here slightly lower to the 137 level and then we get a push back up to the 200 exponential and simple, which are now rolling over, potentially threatening our bull trend? Or did it kind of already happen? And it's already headed back up there. So we'll see when the time comes. It's going to be a tough one to get a decent stop loss in place because whatever we do when we come down here, potentially if we come in lower, is going to be our lowest low. So we don't really have an area to go off of like we would with like a bullish divergence situation. The arguable scenario would be to take the move back to the upside now. But to tell you the truth, you would have to go off of the close of the previous candle, which I think if we ran a 3.5% stop loss, yeah, it would give us only like a 6.5% target to the upside. So less than 2-to-1. There's no trade setup really there right now for Apple, not with probable success and favorable risk reward. So next we have Microsoft. So Microsoft, again, holding up better than most, but still looking bad. Broke down from our, it was a potential head and shoulders pattern. Now it's head and shoulders. Broke down from it. Could it underperform and that was it? And we just go back to the moon? Sure, anything could happen. But more realistically, we do expect the full performance or the measure move from the top of the head to the neckline, or at least a touch of one of these key Fibonacci supports. So the breakdown basically took place from the 236. That was our neckline. We touched below it a couple times, which is where our initial zero was at right here. But honestly, we don't really need that anymore. So just to clean that up a little bit, when we take, we can take a couple of these. We were talking about the bullish and bearish scenario here. The bullish scenario was a retest of the highs. The bearish scenario was obviously the right shoulder filling out. And that's clearly what took place here. Again, we can kind of clean up some of this is much less important now. I don't think this is that important now. So I think right now what we really want to look out for is a potential test of the 382. Now, do we get a bounce back up to retest? You know, we're right in the middle of the 236 and the 382. It looks like we're headed to the 382. Wouldn't surprise me if we came back to the 236. But the truth is, at this point in time, we need to sell resistance. We need to buy support. So that's what we're paying attention to. But Microsoft is officially in a bear market. So Amazon is next. Obviously, Amazon had its capitulation move, hit our $2,000 price target with speed and velocity that even we couldn't predict, even though we did predict the exact level that it would bottom out at. So obviously, that was our entry point for a potential scalp back to the upside. And essentially what we're looking for is just a retest of some of these key levels. So we lost the 0.5 aggressively, came down to the $2,000 price point. So the 382 now, that was potentially our support on the last rip down when we gapped down. Now that's going to act as resistance. So now that's our target for a potential sell if this thing pushes back to the upside. But we hit our target to the downside. We overshot the 0.5. In all reality, we could only get slightly greedier and want it at the 618, which is 1954. Which was $100 lower than it went, not even $90. So we don't want to get too greedy on these, but at the same time, I mean, it hardly looks like the bear market is over, and I hardly doubt that, I don't think Amazon is going to be, one of the bigger losers. I mean, it's down 45%, and it's like an actual good company. So I can only imagine if Amazon is bottoming at 45%, and there's like other trash that has sold off less than that, seems rather unlikely for this to be a potential like macro swing bottom in the markets. Doesn't mean it's not possible, but that's what it tells me. Next we have Netflix. I always forget that I put these charts up here, and then I see them and it just makes me laugh. So, okay, so the amount of people that are profitable in Netflix went up by 3 days right here, and we're now back to 2017 levels. So congratulations, Netflix looking horrible, but slightly less horrible. So, and we can get rid of this. I don't think we really need this anymore. I think we've made our point on how terrible Netflix is. So we basically stopped in the middle of no man's land right here. There was no substantial support or anything that we should have bottomed off. There was no specific area that I see on here that should have acted as a bottom. I don't think this is going to be a tradable bottom. I think it probably goes much lower. We do see some bullish divergence developing on the TDMACD, not on the stochastics. So it's worth note that we actually have some bullish divergence, but if it would have held the 236 or around that area, I could be bullish. But now I really feel like it has to come back down to the 382. I mean, it's come down so low now that it has to, we can't respect this anymore. This was the 2018 top and the bottom. So we already took that out. So we wiped out the pre-Rona lows or the Rona lows. So if we wipe them out already, what are we looking for? Another big swing? So what are we going to go off? This one right here? No, I don't think so. I think we're going to go off the macro swing from 2012. So the bottom was in 2012 right here. Clear bear market, big, nasty bear market. So from 2012 to our top level, obviously I'm looking for the 382 retracement. So I think that's really what we need to keep our eyes on. 121. Google is next. Again, broke down from the 236, retested it. It's holding around that level for now, so I don't want to get overly bearish on Google. It does have some bullish divergence develop on the chart right here, but we are below resistance. And we overshot the 236, but then we didn't just reclaim it right away. We kind of did, and then we lost it again, and now it's acting as resistance. So my inclination is we probably go lower. We weren't able to hold it, not on a daily or weekly close. So 382. So we already took our trip to 2000 with Amazon. It's about to be Google's turn. Google, you're next. Facebook, Meta, reclaiming that key support level, that ascending support. Still looks like trash for now. Obviously, we never were able to get an entrance on that as we were unable to take out those levels. So obviously, this is not a valid trade setup. Now, if we did, Could we bottom right here and then move up? I don't know. We need to see some consolidation. This looks like it wants to get weaker. Like it's really sending mixed signals because it wants to find support here and it's starting to build momentum. But at the same time, it looks like it's ready to just put in another low and another drive of bullish divergence. And then that's probably the entry point that we want. I mean, not me. I would never buy that trash. But, you know, if you were looking at it as potential trade. What do we got? What do we got? What's up, Asotos? Good to see you. Trader Bill, you've been here. If you are in the chat right now, make sure to smash up that like button. Good to see everybody. Always appreciate all the viewers. Make sure that you obviously know none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Give me about 10 seconds. I'm going to mute this real quick and take a drink, and then we'll keep ripping. All right, looking good. So gold, obviously gold closed below 200 exponential and low, you know, consistently putting in new lows. Not good. Bunch of red histograms, bearish control zone. Losing a 200 exponential and simple was huge. Obviously, no surprise. So we lost that 230 level. So again, you know, I'm not particularly optimistic on gold right now because it's not letting me. It looks like trash. The weekly cost back down to the downside. We have a lower high, double top. I expect a lower low. Where does that lower low take us? You know, last low close was 1696 on the weekly. I think we're going to go sweep the lows again. We've lost momentum on this. We have a hard sell signal. We got to be real careful that this doesn't turn into something nasty. Much, much worse. Silver, again, broke down from key levels. A new macro low. So much, 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 much weaker than gold. I mean, if you got silver now, you know, take a minute, pause the stream, go over, pick it up, walk over to the trash, and just throw it straight in the trash because obviously it's garbage. I mean, according to the chart, not me. I'm not throwing away my silver, but according to the chart, silver is trash. You probably, you know, don't quote me on this, but maybe better off investing in aluminum at this point in time with silver's track record. I don't hate silver. I don't hate gold. I just like to be a wise ass. That's all. So silver looks terrible. Back below 200 exponential and simple. It looks absolutely horrendous. I mean, straight up trash. Lost the 200 exponential. Almost hit the 200 simple. Better part of the measure move. Already to the downside. I mean, I would not be surprised to see silver basically back at like $17, $18 maybe. Looks very, very bad. Silver is in the danger zone right now. Gold silver ratio, reclaiming 200 exponential and simple as expected, as discussed, as planned. Back above the 200 exponential and simple, both slope to the upside. Is this the beginning of gold's next legitimate bull market? I don't know. I mean, arguably, depending where you bought at, if we bought at the 200 exponential and simple cross and them flipping their slopes to blue, you know, the last bull market lasted for 2,646 days. So for 2,646 days, you were better off owning gold than silver. And we're just now confirming back into a potential bull market on gold to silver. So I don't know what you're doing for the next roughly 8 years, but I don't know, maybe 7 years. What's that come out to? Doesn't really matter. Regardless, I don't know what you're doing for the next like 7 to 8 years, but probably going to be owning gold over silver. Now, is it possible that suddenly, all of a sudden out of nowhere, this just gets rejected? We break back down below the 200 simple at 82, then we lose the 200 exponential at 78, 80, and then all of a sudden it's like, oh my God, this is it. It's silver bull market. Yeah, sure, it's definitely possible. But we got plenty of way to go before there's anything bullish on this chart. And then the way the silver chart looks too, the way the gold chart looks like precious metals and industrial metals in particular, if we go into a slowing economy, probably going to be going down and probably fast. Because if everyone's afraid of inflation and a commodity bull run or a bull cycle or, you know, whatever, and prices constantly going up and economic slowdown from demand destruction and all this narratives play out, gold silver should be like crushing right now, and gold and silver would both be like going up and the gold silver chart would be breaking down. But that's not what we're seeing. What we're seeing is the bond market is telling us no. The gold silver market and ratio is telling us no. So, I mean, I'm going to believe it. I'm going to trust it. They're basically telling us no. We don't need gold and silver. We don't need to protect against inflation. Well, if there's going to be inflation in the future, the market's smart, so we want to protect against inflation. But that's not what the market is seeing. The market is seeing that we're not going to have this crazy, brutal inflation, a couple years out or more than that. So we'll have to see. It looks like the beginning of a bull market, but we could easily be at the pullback stage going into like the retest of the 200 exponential and simple as we cross into that bull market to the upside. XPD, Palladium, just having a brutal sell-off back down below 200 exponential and simple. Looks very weak. Kind of oversold though. XPT, Platinum, again, very weak rejection. Under 200 exponential and simple. Complete trash. So ACB put in a new low, and then we got a pretty aggressive move back to the upside. Again, I know people get excited when they see these or they feel that FOMO. 28% in 2 days. But, I mean, remember though, that we just lost that 28% in the last 3 days. So you're like, oh man, I just missed out on 28% gains because I didn't pick the absolute bottom. But also though, like we just had 3 days down and then it took 2 days to recover that level. And then like we just have like 1,000 more days down before that. So I'm not that worried about, did we pick the exact bottom? Is it going to go lower? Is it going to go higher? Right now, what we're looking for is, does this develop into bullish divergence? So far, it looks like it's trying to. Not really on the TDMACD. Obviously, maybe some of that was like priced in based on, the big earnings miss. And now this is just a reversion to fair value. But, I mean, I doubt it. I mean, we were just at the support here. It didn't hold. We were just at support here. It didn't hold. And then we broke down from support. So are we just retesting it before we go lower? I mean, probably. Can we go much lower? No, we're at $2.84. So can't go that much lower, bro. Tilray, same thing. Broke down from support. Broke down from key levels. Trying to push back up. Not looking nearly as bullish. We're seeing, again, mixed signal with the divergence. I don't think this is like the macro pot bottom or anything. Probably just, we saw a lot of, and not to hate on pot stocks because I'm actually bullish on them long term. The truth is, though, we saw a lot of trash bouncing. Some of the worst stocks, most garbage companies, most speculative, like just trash that you wouldn't even want to own. Some of them had the biggest bounces because they also had the biggest downtrends. So the pot stocks have been getting absolutely crushed. So it makes sense they would have a 30% bounce. Something like Peloton getting absolutely crushed. Coinbase, Robinhood. I mean, sure, it's like, oh, this important person is going to take a 10% stake in this important company. That's the bottom. No, probably not. That person probably has been buying or is buying, and it will likely go lower after that because they wouldn't be like publicly announcing their buys at the absolute bottom. I don't think they're going to help bottom an entire market by just buying like 10% of Robinhood or something like that. So doesn't seem likely. And also most of those trash stocks or speculative stocks, whatever, most of them didn't bounce off of like key levels in the same way. They sort of bounced in the middle of nowhere. So it really makes me think that, basically we saw the S&P bounce pretty technically. We saw the Dow bounce pretty technically. We saw the Nasdaq and kind of the Russell bouncing pretty technically, just off of different horizontals. But the truth is, the rest of the trash is just kind of bouncing probably because we're getting a dead cat bounce market-wide. So we'll see what actually happens into the future, especially with some of these individual stocks, especially ones that are already making lower lows consistently and new lows for like, since like 2018. Doubt that it's just randomly the bottom all of a sudden. Possible though. We'll keep an eye out for it. CCJ, so we broke down some key levels, lost to 200 exponential and simple, lost our fib level right here that should have acted as support. It did not. So the next level to pay attention to is down here around like 17, 18. Still just headed down to our targets. Still in the bearish control zone. Still a bunch of red histograms. One green one now. Do we get more price side to the upside? Possibly, but, is it just going to be followed by more downside? Probably. URA rolling over. Bear market confirmed. I mean, we just bounced our previous low. The next low is 1758. We're still just looking at 1450. Nothing has really changed here. Basically just got, perfect retests on all the uranium stocks. This is UEC, and then a retest back to the upside, which will likely get rejected at another lower high and go lower. And then UROY hit our target to downside. So this thing overperformed to the downside, which is not good. So we hit the bottom of the channel. We hit our key support level, the 382 macro fib. So what's going to happen next? Do we get that pushback to the upside to the 236, to the 200 exponential, 200 simple, back to about $3.60? Yeah, we probably do. And there's probably a 30% move to the upside. So there may be a tradable setup in play now. So obviously we don't want to see a close below our previous close. And we're probably looking at something like this. So 30% upside with a target of 364. Stop loss at 251, 10% downside potential risk. Risk reward ratio is 3 to 1, upside favorable. And all that is just a quick little scalp to retest for 200 exponential and simple. This thing has been underperforming though. It's been overperforming to the downside or underperforming to the upside. So it's been performing worse bullishly or better bearishly. So the likelihood of this trade setup playing out is probably closer to that like 40% range, the lower end of the spectrum. Still worth taking? No, probably not. Probably not. Definitely some nicer trade setups in the market at the moment. But again, most of them are counter trends, so got to be very careful right now. So checking out our crypto. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we have our Bitcoin futures chart. So we did close down to a new low. We had a rejection of lower prices in the form of a very, very big wick and a small body. After that, we saw a bullish engulfing candle. And that was our close on Friday. And then obviously we saw a slight gap up here today, up to about that 31,000 level. This is where I expect us to kind of hang around for a bit while the market decides. We are getting a hard buy. We are seeing a green histogram, but we're still below all of our moving averages. So we don't want to get too excited right here. When we look at it on the weekly, again, we almost touched a 200 exponential on the futures market, but we didn't. We closed below the previous swing lows, weekly closes, not good. So now not only did we have a new low below that previous swing, we had a new low below this previous support level as well. Now we got back up to it to try to test it as resistance or reclaim it as support. So it's probably going to be a fight taking place at this level for do we go higher and reclaim support or do we go lower and, hit new lows. Arguably, we filled our gap right here on the futures chart, or at least the majority of it, which is definitely a good sign. We are seeing a hard sell, but it's below the neutral line. So it's a little less respected, not coming out of the bullish control zone, but like much below the neutral line. Now we are in a bear trend though, so we have to give it some respect. So again, we have a high, we have a low, we have a lower high, and now we clearly have a lower low below our previous low right here. So we have now what looks to me like an Adam and Eve topping pattern. So here's our Adam V, here's our rounding top, Eve, and then we're at support now. So if we lose this level, it's probably going to be detrimental to the crypto space. More likely than not, we retested 200 exponential and simple. So next targets to downside are 24K and 22K. Next targets back to the upside. If we reclaim these levels, we're going to want to see roughly a jump back to like 32, 36, 38 roughly. I'll show you on the short-term chart for our spot market what I'm looking at and my current trade setup. But overall, not looking great. Crypto not looking great. Had a nice little pop to the upside, but probably just a dead cat bounce. So here on the daily, again, a bunch of green histograms, hard buy signal. We see a decent push to the upside. We see a hard rejection on the Bitstamp chart. We're back at the 8. Next target, if we should move up on the daily, would be the 21 at roughly 34,000. After that, we'd be looking for a potential retest all the way back to 200 exponential and simple. Seems very, very unlikely at the time. We're going to go down to a short time frame chart, and I'm going to show you what I'm looking at now. So what I'm paying attention to now, when we got this initial push down here, what I was telling to some of the group members, it's been a little quiet lately. I understand people don't like logging into their accounts or, looking at what's going on when things are bad. They prefer when things are rosy. But, the best time to make money is in a bear market. The best time to learn is in a bear market because you don't need to know anything to make money in a bull market. So what we're paying attention to on the 4 hour and what we're looking for bottoming signals, for this potential reversal is one, buy, sell, buy. Okay, that's the start of it. We also needed some bullish divergence. So we have a low here. We have a higher low prior to that. Here we have a low, and then we have a higher low here. So we see some clear bullish divergence on the 4 hour between these points. Same thing, we see this come down and then act as support for a higher low. So that's where we enter into the trade once the bullish divergence appears to be developing. Arguably, once the bullish divergence prints with the second green histogram, you can enter. Once we get a pushback up and retest and put in a higher low, you can enter. Once the 8 and 21 cross to the upside, you can enter. You can enter in various places and strengthen as you go. Once you see the slope line on the TJD TDMACD flipping blue, we can enter. There's lots of ways we can determine entry or just strengthen our position as we go up. So as of now, we have crossed 821 back to the upside. So on the 4 hour chart, our next target to the upside is roughly that 36,000 level. Now, could we easily just get rejected and just collapse, go straight down to zero? Bitcoin's going to zero. I mean, it's possible. It's very unlikely that we go to zero, but it is possible that we get across like this and then a failure. So what we are looking out for is weakness in the market and something that would signal us basically that this is rolling over. So on the 4 hour chart, and again, I don't often like to look at those short terms on the channel because it's going to be days before you see my next video, but that's what we're paying attention to. And then we see obviously there would be resistance around 34K because that would be the 21 moving average on the daily. And then again, if we got that push all the way up to about 36K, we see that some of our swing low levels from what was support previously, on some of these touches down here. So again, we would expect that to act as like a resistance. And then if and when we possibly break through that 36 level, that's when we start looking at like the 42 level to the upside. But that being said, while I've given you a short-term potential bullish play that I'm interested in, involved in, looking at, playing with, testing, that trade setup has a higher probability of failing than not because we're clearly in a bear market. We're clearly on the weekly. The 8 and 21 got rejected. We moved all the way down on the spot market and retested the 21. The moving averages are in different places now on spot and futures charts. So now we have not only the 200 exponential and 200 simple, but we have it on both charts. So we have 4 different key levels that we're looking for this potential market to bottom out at. And depending on what exchange you're looking at too, we know like if you were looking at 200 exponential here, we lost it, and you weren't looking at 200 simple, you missed the bottom here and probably got scared and thought we were going much lower because it looked like we broke down from it. We retested as resistance and we were going lower. But in fact, the 200 simple saved us. We never closed below 200 simple here. We didn't do it in previous bear markets as well. So again, that's our key level. If we close below that, we know something is seriously wrong. Right now, it's around 23,000. So I don't think it's unrealistic that we get a push down there. Our last push down was about 25.50. It was a cascading waterfall. We're still showing weakness on the daily, on the weekly, on the monthly. So seems more likely than not that's where we're headed over time. We just got to see what happens before we get there. And again, we're going to pay attention to potential for divergence to develop on this chart as well. Here I would identified bullish divergence. Here we identified bearish divergence. So when the bearish divergence played out, we got an aggressive move back to the downside. And now here's our bullish divergence, and that played out, and we got a push back to the upside. So that arguably this macro weekly divergence and this macro weekly divergence have already played out. So now we're just looking at what takes place and what happened. We had bullish divergence or bearish divergence. We had bullish divergence. We underperformed bullishly, and then we came back down to support. So in my opinion, the bears are still winning. They're still stronger. We're getting a hard sell below the 50, below neutral level rather. At support, looks like we're going lower. This is already lower than the previous low. This is already lower than the previous low. So we don't even have any signs of potential divergence building on the weekly at this point in time. So not looking good. And then the monthly, obviously, we broke down from key levels. We didn't put in a new monthly close, lower close yet. But the weekly close is what we were watching for this week. And today they tried to rally all the way back up off the 200 exponential and simple, but we did actually put in a lower weekly close here. So not only on futures markets, but spot markets also. New low weekly close. And what does that mean? It means the most likely situation is that when we're putting in lower lows, we continue to put in lower lows until we don't. And we only don't put in lower lows one time. And then we start to go back to the upside and we can start looking at the trend. So as far as I'm concerned right now, weeks without incident, if you watch the last stream, we put up one of those signs and it's like, did we put in a lower low on this time period? So on the weekly time frame, here we are, 1 hour into our new weekly candle, and it's like, okay, we look at the big board on the wall and we say, did we put in a new lower low on the weekly close this week? Yes. So weeks without incident, 0. See you next week. But that's the most bearish thing that could happen. The most bearish scenario that could happen is we put in a new weekly close. So it just happened. So in my opinion, no reason to be bullish right now on crypto assets. That being said, let's take a look at some of the trash in the crypto space. So we have Ethereum, obviously looks terrible. New low for the previous low right here, but not a new low for back here. Well, arguably the wick is like the same spot, but close-wise, Ethereum slightly stronger than Bitcoin, but again, looks very, very bad. And again, this is what, keep in mind, this is what people are excited about right now in crypto. Just keep in mind, this is what they're excited about, or stocks, okay? We just bounced, and now we're only down 56%. Congratulations. We're only down 56% now from the highs. But from the low, where we bounced right here, we're up 24%. So that's good, right? I mean, I don't think so. But, if every time we have a 20% rally or 30% rally or 40% rally, you get excited and you buy, you're going to be broke before the bear market's over. That's a fact. So now we have Bitcoin dominance chart. All right, so not to float my own boat. I know I always say, oh, it looks like we're right again, but it's not my fault because we are right like all the time. Okay, so that being said, I'm going to float my boat because I'm right. And when I'm right, got to rub it in, right? I mean, you guys are all right too because you're here listening. So what happened? So we had 3 drives of bullish divergence on the weekly Bitcoin dominance chart. It played out. We finally got the break to the upside back to the top of the channel. So now at this point in time, we closed outside the channel, at or outside the channel. We did it once before, it got rejected. We wicked up here, it got rejected. We tried to break out here, it got rejected. Technically, this is a breakout. We did it. The real question is, are we going to get follow through? Stochastics are angled back to the upside. Momentum is in our favor. 821 just crossed the upside. That's a pretty thick and juicy bullish candle right there on a weekly. And we closed outside resistance. So in my opinion, it looks like we're about to get the measure move, which is the distance from the bottom of the channel to the top of the channel. So we know that that's going to take us potentially up to about 51% Bitcoin dominance. So what is going to make Bitcoin suddenly shoot up 6.5%, 7% on Bitcoin dominance? Is it Bitcoin suddenly just overperforming to the upside and altcoins just watching and not going to the upside? Or is it going to be Bitcoin selling off and altcoins selling off much more and Bitcoin gains dominance because the market cap of crypto goes way down, but the market cap of Bitcoin only goes down some? That seems much more likely. Because if we break out to the upside, all the crypto trash, all the garbage, fake crypto projects, the trash coins, the stuff I've never heard of, the things with, names like Moon or Cum or Rocket or Moon Cum Rocket, any of those combination of things, anything with a dog name in it, they're probably all going to rally. If Bitcoin rallies 20%, they're probably all going to rally 50% because they're so beaten down. So how on this chart do we get a bullish move to the upside where Bitcoin gains dominance? We don't. I don't think we do. So you could argue we should be selling resistance right now. For me, I'm looking for this area to hold and then continuation to take place. Because this looks to me like a break, retest of that area, see if it holds for continuation, and then follow through. So that's what I'm paying attention to. The last time we saw a situation like this happen, where we had a low and then Bitcoin dominance started rising and then was putting in higher lows, was basically, this was the end. This was 2018 January. This was the blow off top of the altcoin market. Bitcoin had topped back here in December 2017. This was like Bitcoin topping, and then altcoins were going nuts while Bitcoin was going sideways or down. And then this was Bitcoin going down while altcoins went down. Then this was the kind of bounce back to the upside. Then this was Bitcoin going down while altcoins went really far down. Then Bitcoin kind of, bouncing back a little bit. Then Bitcoin going down a bunch more while altcoins just went to zero. And then obviously, you know, this was our double bottom, December 2020. Or top, arguably, depending on how you're looking at it. And then from that point in time, you know, we see what happened next. So what we're looking at now is we have a low right here, and now we have a potential higher low being put in. So if this starts to break back down or back to the upside, you know, AKA what we just talked about, we're looking at now a low, then a higher low. So we have a low, then we have a, you know, high, then a higher low. Then we're looking for a potential higher high on Bitcoin dominance. So what is going to make Bitcoin dominance come back up here to like 71%? I mean, either a really brutal bear market or a bunch of altcoins going away or regulation or all of a sudden, you know, central bank buys like 1 million Bitcoin. I mean, I don't know. Any of those situations could happen. Are they going to happen? Probably not. Are they probable? Probably not, depending which one, but looks more likely to me than not. Same with that, you know, gold silver chart. Looks exactly the same. Do you want to own gold, or do you want to own the shitcoin gold, which is silver? I mean, right now it looks like gold. Same with Bitcoin. You want to own Bitcoin? You want to own shitcoins? Looks like Bitcoin. But I mean, you know, that's not the only thing you have to invest in also. So it may be time, you know, I mean, it's been time, obviously, to pull money out of crypto and take profits. But I mean, at this point in time, I don't have to tell you that. I've been telling you for months. So unless it's your first day, welcome to class. Crypto total market cap looks very much like the Bitcoin chart. So obviously we saw Bitcoin spot touch that 200 exponential moving average. We're seeing the same thing here. As far as lower lows for closes, okay, the weekly close, again, I only look at certain charts on the weekly. Most things are on the daily all the time, but you'll get used to the same charts on the weekly. But the daily close or the weekly close on total market cap did not take out the previous weekly close like Bitcoin did on spot and futures markets. So that is something at least. What does it mean? What's it going to mean? We'll have to wait and see, but it's at least a start. It's more bullish than what Bitcoin just did. So now it does look like it's about to get across the downside. It is all red histograms. Probably does go lower, but regardless. All right, so next we have Matic. Obviously Matic just capitulating down to the 786. So we talked about this already. We pushed back up to 618. We're at resistance. We're at support. What's going to happen? Does the 618 hold now and we push back up to a 0.5? It's possible. 91 cents target to the upside. There's not a lot to go by on this. Obviously, just put in new lows. So we don't want to get too bullish on this, but it definitely looks like there's a bullish setup. Arguably, though, we're at the 618 already. So it's a coin toss now because the next move up is the 0.5. The next move down is the 786, and we're at the 618. So probably not a great tradable setup right now. If it gets slightly more bullish, maybe, or if it gets slightly more bearish, maybe. But you probably missed your dead cat bounce on most of these. AVAX, Avalanche, came down to the 1.618 Fibonacci extension on the Coinbase chart. So what from there? So that was obviously our low. That was our high for when it was listed on Coinbase. Obviously, this has more history. But hitting the 1.618, pretty key level. Are we going to come all the way back up here and retest the breakdown level? 51? Probably not. I really don't think we do. I mean, that's a 50% move. We really just have to let some of these develop. It is getting a buy, sell, buy signal. They're kind of spaced out, but they're evenly spaced out. 3 green histograms. So what? Do we take an entry right here and then look? I mean, I just don't know how. I don't know. We'll see what the risk reward setup looks like. And then we can mess around with if it will actually be, you know, a tradable, decent setup. I mean, we don't want a lower close than the previous close, so that's 12.5% stop loss. So already a little thick on the stop loss, but we're talking about a potential retest of at least the breakdown level for Avalanche. 47% upside with 12.5% downside. So it's a 3.8 to 1 risk reward ratio with a less than 50% probability of success because we're obviously in a bear market. Looks probably okay, so we'll keep an eye on this one. There's definitely potential here, as it is almost 4 to 1 risk reward ratio. So Solana, okay, so we were looking at these potential Solana setups. Obviously, they did not meet our criteria. We couldn't get the close above our potential entry price, so those were never entered. Now we've had a capitulation move to the downside. We came almost down to the 786 of the macro. Again, I'm on the Coinbase chart, so this was June 2021 to the peak, all-time high of November 2021. Came all the way down to the 786. So we retraced 78.6% of the move. Back on top of the 618. Next target to the upside would be a retest of the 0.5 at 74. Next target to the downside would be a slightly lower low and probably the 786. So this one really is a coin toss with no probable. Yeah, no, there's not going to be a good setup here. It's going to be a 50-50 coin toss in a bear market, so not good. XMR, so Monero obviously capitulated down from the attempted breakout. It was worth a shot. Hopefully you locked in your gains on this one. It did the better part of the move, almost 70% move to the upside from the breakout level, so definitely worth paying attention to. Oh no, you know what? I think this was the original entry, and this was a potential second entry off of the breakdown. So it would have been slightly less, but I mean, still, I think it was something like 50% or something like that from the breakout, 43%. So nice trade overall, underperformed, which you would expect in a bear market, obviously. This thing has been very, very beaten down, but as of late was a little stronger. It came down here and put in a new low, and it actually wicked down to that 0.5 level. So that was the fib level we were paying attention to, the 50% retracement for the potential handle. So I don't think this invalidates the potential cup and handle setup on this. But the rest of the market looks bad. So I don't want to get excited about this either. So it bounced to 0.5 back to the 382. It likely goes to the 618 next. Because more likely than not, it probably goes lower from here. So short term, maybe it gets a little more bounce to the upside. But, I mean, that's 50% from where we're at right now. It looks like it has 50% downside. So I would be real careful getting stuck in Monero when it goes to $80 very, very soon. So as a matter of fact, we can just kind of pop this up on there in the meantime and just kind of watch it. I'm not convinced it doesn't push up slightly higher to one of these levels, but let's at least pay attention to that 50% potential move. There's not going to be an actual trade setup here unless we run like a super, super tight stop. Put it like above. I mean, you can't even respect that anymore because we wick down below it. And that looks a lot cleaner though, because look at that 618. So arguably, what, you're looking for a 382? Yeah, that's a tough one because your stop loss is going to have to be either real, real tight and you don't take a chance, or you run it way too thick and it's not profitable. So you could put like a 5% stop loss with 50% downside potential. It's going to give you like a 10-to-1 risk-reward ratio. And it would probably say the right thing if I used the right tool. But yeah, if we potentially entered right here, you would be looking at a pretty juicy downside target with a pretty tight stop loss. Because basically, if we break back above this, you don't want to be in it. Not a good trade setup. Not ideal. Because you could easily get stopped out and then it goes in your favor and then you're all salty. But I would expect further downside. It looks like that's what it wants to do from here. Obviously, Monero's trash. Algo, that's the chart speaking, not me. Algo on the daily. Still pretty much operating inside the channel. It was looking a little messy there, how we had it drawn before. I wonder if that's a little cleaner. I mean, not really, but at least now it's like a parallel channel, or like slightly more parallel channel. But yeah, we're basically just still operating inside that channel. We did come down to our lows, so that's good. We hit the 618. Target acquired. Target hit. Now what? I'm just trying to push back up to 0.5. Building up a little bit of momentum. Probably gets rejected. I mean, already hit the 618. How much lower is Algo going to go? I don't know. It's a tough one because we just hit all these targets to downside, which is great. That's perfect. But now there's no trade setups because everything bounced like 20%. So you're not going to really find a bunch of trade setups after the reflex rally. Same thing. We bounced the 618 and we're almost back at the 0.5. So there's just not going to be a great trade setup. What if we come back up to the top of the range? What would that mean? Could we get up another 33%? Sure, but it's like 23% downside. So not a great setup right now. Still very bearish. Very, very bearish on crypto. All looks like trash. It's garbage. It's trash. Throw it away. Polkadot, trash. New low. This is, again, just the Coinbase chart. So a lot more history going back. But a breakdown from that $10 level is key. We did reclaim it. For now. We'll have to see what happens. But that was a perfect bounce of the 1.236. So somebody else is looking at this exact chart and that swing low. Obviously, everything has played out beautifully so far. I think what we have to look out for is an upside target of like $14. So like $3 to the upside, $3.40. But the downside target is like $5. So there's no good setup right here. It just really looks like trash. I mean, just honestly, like the markets just look horrendous right now. Which makes sense. That's what you would expect. It's a bear market. It's supposed to look like trash. If we go from the top to the bottom and we argue that's the swing low, we did already hit the 236, so we could validate that. Usually we get a lower push and then we get a push back up to the 382. So maybe we could get a lower entry on this and an actual like decent trade setup. I mean, where's it going to come back down to? I mean, we don't really know. Probably like right here. Again, we want to keep our stop loss below the close on the daily. And then we're looking for a retest of the 382 in red or 786 in green. So what does that give us? 2.7 risk reward ratio, 48% upside, 17% downside. See, it already moved so much off of the low. The stop loss is ridiculous. So you have to take like a quarter lot or half lot position on this because the stop loss is just so ridiculous. But it's still like a 2.7 to 1 risk reward ratio. So if it gets down there, I mean, I would want to see it come down and put in bullish divergence, and then I would want to buy the divergence. You know, is it here? Is it here? We don't know. We'll wait and see, but there's some potential. But again, dot looks like trash. It looks absolutely horrendous. We're looking for literally a scalp. Like the scalp, the last trade, that we make before, after removing a large section of dots, scalp, it bleeds to death and dies. So no, we're not buying this to hold. We're not accumulating polka dot. We're talking about a scalp. Next we have Hex. Obviously trash, total garbage. Bear market, breaking down, bounce support, which is good. It hit our support level, bounced it. Still looks really, really bad. Really bad. I mean, just a big descending channel. So, we're essentially at the heart line of the channel, below 200 exponential and simple. We just retested 200 exponential and simple. So what are the chances? Well, we probably go much lower. So you guys see my chart. Was that our 4 right here? And now we're just going lower from there? Maybe. We'll have to wait and see, but looks pretty likely. Hex definitely looking like trash. It's not looking like trash. It's looking like garbage. Hot garbage. And not the good kind. Oh, yeah. So probably going to be a crazy week in the markets. Definitely excited. Looking forward to some big moves. Waiting for, volatility. I mean, we've seen quite a bit of volatility, but not actual volatility as an indicator. So, I mean, looks like a dead cat bounce to me so far. I haven't seen anything exciting. We're talking about crypto and some potential for like that 4 hour to have a decent move to the upside. I would not be surprised at all if it's just a complete rejection and we just continue to melt down. The key area to watch is basically like that 30,000 level. If we're above 30,000, we're okay. If we're below 30,000, the clock is counting down. So jump over in the comments right here real quick. And then, that's all we have for today. So probably going to chalk it up. Hi, Lewis. What is the topmost indicator? Like that you could put on your chart for free? Probably, I don't know. I mean, depends on your skill level. Depends on what you're looking for. Are you looking for a leading indicator? Are you looking for a lagging indicator? I mean, I would say the TJD Master is the best indicator ever created in all of existence. But also, I made it. So I might be biased. But it is really good. And it's provably works awesome. So that's the top indicator for me. After that, the TDMACD and the Jewel Thief. And you can get the old Jewel Thief for free. You can get the TDMACD for free. And you can get it's not the TJD Master, but you can get some of my other previous moving average strategy indicators for free as well. Like the PSAR with B pivots. It's the parabolic SAR with binary pivots and moving averages. That one's another one that I publish for free. So if you don't want to make a contribution, you don't want to join the group, you can get those for free. They're all listed down in the description. And they're the best by far. Better than anything else in existence. Sort of. Kind of. They're good. They're okay. They're strong. Calma Betty says, all good around here. Yoda loud and clear. Oh, I think we did all those already. So I think that's it. Oh, Trader Bill says, just like everyone expected a blow off top this cycle, the majority is now expecting the 200s to hold this time. Just when they think you might have figured it all out, it will start behaving differently. Exactly. I talked about the blow off top scenario and how it was going to trick everyone for months. And then exactly what I said happened. We literally got the rolling correction double top, which now looks beautifully like an Adam and Eve. So, we talked about it forever. Obviously, Bill, you're in the group. But we talked about it forever. How everyone was expecting a big blow off top. And everyone was saying there's no way this is the top because we didn't get a blow off top. But the fact of the matter is, there's two ways that things bottom and top. They blow off, and that's like your, explosive top, and then immediate like capitulation. And then there's also just a rounding top. And rounding tops and rounding bottoms are just as common. Oftentimes that's what we'll see for a double top or a double bottom. So excellent observation, Bill. Obviously something we've been discussing for months in the group and probably saved a ton of us a ton of money, or from giving back a bunch of our profits at least. But yeah, I do agree. Everyone is super cocky, super sure now that the 200 exponential and simple are going to hold price action. Would not surprise me at all if we saw the end of our 5-wave structure on the macro and our 12-year period, and then we went into a long-term bear market retracement, corrected extremely deep, and then began, the beginning of our 3 for a macro 5-wave cycle. Trader Billy J said, especially with the MACD on the monthly still so high, upcoming in the slope with some aggressive histograms. Yeah, dude, we're so far away from starting to build back up momentum again for anything but a long-term divergence print. These things have to reset, and it can reset with either price or time. We can either go sideways forever and get a bullish reset, or price can go down and the indicator oscillators can go down and we can get a regular reset. But regardless, we need a reset. So a bullish reset would be fine, but more realistic, we're probably going to get a regular reset on a weekly or monthly chart. And it's going to take a while because we got up to crazy, crazy levels on stocks and cryptos. So it would not surprise me at all to just see, we talk about it all the time. There's two types of capitulation. There's price capitulation, where price goes so low that you get liquidated or you quit or you give up. And then there's time capitulation. And time capitulation means it just drags on for so long that eventually you have to sell your position because you need that money. You give up on speculation. There's something better you could put your money into. Whatever it is, that time capitulation can be much more powerful than price capitulation. Because price capitulation, think about the Rona dump price capitulation. It's like, oh, price sold off 50%. Oh my God, this is horrible. It's the end of the world. And then it's like, oh, and a month later, we're back to the same level. And a year later, we're at new all-time highs, just absolutely crushing it. That's not pain. It's painful. You could get stopped out. It could scare you if you look at your charts, but you can just look away for a couple months. And then you look back and you're like, oh, thank God we did it. I'm a genius. But that time capitulation, that hurts. Because when time goes by, that's where the real pain happens. Because the price doesn't, it's like people say all the time, oh, losses aren't real until you realize them, or gains aren't real until you realize them. Sure. So if you don't sell and a month later you're back to where you were, you're like, and I can breathe again. But if it takes 6 months, a year, 2 years, 5 years, 10 years of sideways or down, that is pain. Loans are due. Your $30,000 Bitcoin investment of $1 billion with, minimal percentage loan payments, going to absolutely kill you over a 10-year period, especially if you end up having to go back into raise more capital again to pay those loans because you don't want to sell the Bitcoin that, you bought with the borrowed loans that's now upside down at a loss. So it can get real nasty with time. And when you get price and time capitulation, that's where it's a real killer. That's where it's a real killer. Because you're down massively and then you still can't even sell because you're down so much, and then it takes 10 years to get back to where you're at again. So it's like that double beat down, that just full-on demoralization. And we've seen that quite a few times in the stock market. People seem to forget, but, they're not going to forget if it happens again. But yeah, that's it for this week. So appreciate everybody checking out the stream tonight. Obviously, it is our Sunday stream. We will be live again on Wednesday from 8 p.m. till 10 p.m. And then, of course, Friday from 11 a.m. till 1 p.m. And then, back again next Sunday for our market look ahead from 8 to 10 as well. So make sure you check out all of our live streams every week. Make sure that you like and subscribe. Hopefully you enjoy the video today. Obviously you can ask for asset requests, group requests, topic requests, anything like that. Post them in the comments or just let me know. Shoot me a message accordingly. But that is it for today's stream. So it is Sunday, 9:36 p.m. Eastern Standard Time on May 15th, 2022. I'm Crypto Trend Trader, and I'm out of here. Appreciate each and every one of you. Looking forward to a very powerful week in the markets and making some quick and easy cash money. But remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Peace. Crypto Trend Trader, and I'm out of here.